Hi, this is Matt from Synergy for Trading, and the topic for this video is going to be what the mob is and why not to be part of it. We've all heard the expression that, 90, 95, 99% of traders lose money. Okay? Uh, and I have to say, I do agree with that statistic, okay? I've been this statistic for far too long to not agree with it. But I think that's for a couple of reasons. One, is they use lagging information. Okay, almost all of them use lagging information. We teach you how to correct that by learning how to trade pure price action at synergyfortrading.com. But the other reason uh, they lose is because they follow the mob. Okay, and what mean by the mob is they are never the contrarian view in the market. Okay, with what we teach you at synergyfortrading.com, we are almost always the contrarian view in the market. Now, that does not mean that we are trying to sell tops and buy bottoms and just randomly, going counter trend. That's not counter trend to contrarian are not the same thing. Don't confuse the two. What I mean by being contrarian is if the mob, i.e., most retail traders, are getting to the short side, we are looking for them to fail, okay, and get pushed back to the long side and riding their buy stops to profit, okay? And that can be illustrated perfectly. This is in the S&P E-minis 2-minute chart. A couple days back, we had a massive move up in the morning. And after you get a massive move like this up, everyone starts, all the retail traders, they try and go counter trend off this, okay? So the mob's mentality here is to sell this market because it's gone too high, or it's at X pivot level, or it's at R3 or R2 or something, and so it has to go back down, or it's oversold. All of the lagging information that the mob uses is telling them to short this market. So they start to do it, okay? And you see there's a prior pivot high put in right here. And let's say the mob is even intelligent enough to try and use a candlestick pattern like an inside bar, like right here, to try and get short in this market, okay? Well, so what candlestick patterns, what inside bar traders try and do is they'll bracket the bar at the low of the bar, and they'll put a sell stop down at 0950, okay? Well, guess what? The pros know this, okay? They're looking at the same information, and so what happens is the mob's saying, gosh, this is bumping up against resistance up here. We got an inside bar. We need to take this thing short, okay? And so the mob's just trying to blindly short into this. They fake them one tick below, so all the mob gets short, okay? Well, what we do at Synergy for Trading is we wait for the mob to step into a position like that, and then we wait for them to fail. And that's what's identified on this candle with an inside bar fake out trend long entry, okay? And what that means is the mob got faked short, they couldn't close them down, they closed back up, and all we do is apply our risk grid, put our buy stop up at 11, sell stop down here, and then we take 2 or 3 to 1 out of the trade. We get to par when we get 1 times our risk. We get our profit levels either at 13 quarter, okay, which would trade through and get filled, or you'd be looking to fill up at 1450, which obviously would not fill on that candle. And you also are getting other price action setups like a synergy short signal here that's pretty much saying to you, you know what, this move's over, guy, and you need to be taking your profit now. So let's say we get out at the close of that bar. That's when that signal would generate because we use up to the tick information with price action trading. We do not wait for a lagging confirmation to get me out for a point less. Close of this bar, 13 quarter, get out. That was an easy 2 2/4 points. And what did we do? We let the mob believe that they could sell the market. We waited for them to fail. And guess what? Think about what happened here. When the mob gets short, where are they going to place their stops, their protected stops? They're going to place them one tick above here. Duh. So when they fail, we look to enter as they're failing. All of their orders are being pushed into the market as they get nailed out. and that drives the price higher with us along for the ride. Don't be part of the mob. That's what we teach you at Synergy for Trading, and we teach you how to use that very skillfully at different places in the market where we take the contrarian viewpoint, okay? And the contrarian viewpoint is opposite the mob. Professionals are almost always in the contrarian viewpoint. They are very rarely ever in the mob's viewpoint. So keep that in mind when you're trading. If you want to learn more, please check out synergyfortrading.com.